What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, we are going to talk about how to choose a life insurance company for our infinite banking policy, right? It's a big decision. We want to make sure that we're setting it up with the right company. So there's some basic criteria that we want to look for within these companies to make sure that we're choosing the right one for us, right? Now, what you'll find is with this criteria, you'll often see like the same top 10, 15 companies, whatever. And you really can't go wrong with either of them. They're all great companies. It really just depends on what you're looking for. But this is like the basic stuff that we want to look at. All right. So number one, they need to be a mutually owned life insurance company. All right. Versus a stock owned life insurance company, where with the stock owned company, obviously their purpose is to serve their stockholders, not the policyholders. Not that they're mistreating policyholders or anything, but again, it's just when we're setting up an infinite banking policy, we want mutually owned. Because with mutually owned, as policyholders, we actually own part of the company. And so the profits are redistributed to us every year as dividends. The dividends aren't guaranteed, but kind of brings me to the another point here in a second. But as policyholders with a mutually owned company, we own part of that company. Dividends are redistributed, or profits are redistributed back to the policyholder. Right? We want the company to have a Comdex score of at least 90. That's COMDEX. All right. Comdex score. But basically what that is, it's a combination of all the ratings from different rating agencies like S&P, Moody's, et cetera. And obviously the higher the score, the higher the number, the more financially sound the company is. Obviously, we want to make sure that we're setting our policy up with the most financially sound companies that we can, right? Because we want them to be around for a very long time. We don't want them to be over leveraged and taking a lot of risk in their general accounts, their general fund and stuff like that, right? So really, we want really financially sound companies that are just great at risk management. Higher the Comdex score, that's just a really good indication of the financial soundness of the company. Right. Ideally, too, we want companies that have always paid a dividend, right, for a number of different reasons. One, dividends have a really positive impact on our policy performance, right, and the growth of our policy. So we obviously want that to continue every single year because dividends are not guaranteed. But if the company has a really good track record of paying dividends, even throughout all of the chaos of the last 100, 120 years, that's a really good sign that they're probably going to continue paying dividends. And it's also a great indication of the strength of the company and its ability to manage risk. It's like if these companies, they've paid dividends through the Great Depression, World War I, World War II, savings and loan crisis, 2008 financial crisis, 2020, with all that stuff, these companies still paid a dividend. The companies that I like to work with, Lafayette, that's who I have my first policy with, they've paid a dividend for 119 years straight. One America, sorry, I'm right by the street there. One America, that's who I'm setting my second policy up with, they've paid dividend for 146 years. Like, that's crazy. That's a long time to be paying dividends out to their policyholders. So to me, that just shows how awesome these companies are at managing risk and just taking care of their policyholders. So, and we always want to get that dividend. We want the company to be in business for at least 100 years. This is not like, is there wiggle room for this? Sure. But again, if we have the option to go with a company that's at least 100 years old, that's always paid a dividend, why would we not do that? Again, it just shows like the longer they've been in business, the more financially sound they tend to be and a better track record that they have, right? Next, we want the company to only focus on and sell life insurance products. So life insurance, annuities. We don't want them commingling in property and casualty insurance, health insurance, all this stuff. Again, it's not an absolute deal breaker, but when setting up my policy, again, if I have the option to go with a company that only focuses on life insurance, I'm going to do that, because with life insurance, it is so much more predictable. Like the actuarial data, these actuaries that work at these life insurance companies are just incredible. I mean, they can determine with like laser precision accuracy roughly how many people will pass away in a certain group at a certain time. So they know exactly what premiums to charge. They know exactly how much benefit they're going to be on the hook for in any given particular time. They know what their costs are going to be, right? That's one of the reasons that these companies are so safe and so profitable is because of that actuarial data. With property insurance, like we don't know when the next a category 5 hurricane is going to ravage the East Coast or whatever, right? We don't know that. And that can result in catastrophic loss to the insurance company. We just don't want to be messing with any of that. So life insurance, annuities, like they can pinpoint exactly what their costs are going to be, what their profitability is going to be. That's what we want them to focus on, because that's just going to benefit us in the long run. And then lastly, I would say also we want the company to be pro infinite banking as well. Now, that doesn't mean that companies out there that I guess you would designate as against infinite banking, and really they're not necessarily against infinite banking. It's the way that it's sold, which I can't blame them. A lot of times infinite banking is presented in a very interesting way. But anyways, like for example, the company I set, so Lafayette, I set my first policy up with. You could call them up and say like, hey, I'm setting up this infinite banking policy. I want to run illustrations for this, this, and this. And like a lot of them, the people at the company are actually educated on infinite banking, and they encourage it as long as it's presented correctly and set up correctly, right? Same thing with One America. I've had multiple conversations with people at that company specifically about infinite banking. There's other companies though that kind of shy away from it, and I can understand why. But again, we want our interests to be aligned with this company, because we're going into partnership basically. We're becoming partners within this company, so we want to kind of be on the same page. It just makes sense, right? So yeah, ideally pro infinite banking. Lafayette, One America, really good for that. There are others too, but it's just something kind of like a side note that or like a side criteria that you want to consider. Are they do they encourage infinite banking, the infinite banking concept? To me, that's pretty important too. So anyways, I'll go ahead and wrap up there, guys. I didn't want this to be too long of a video. I just want to give you some basic criteria, things to look for when choosing a life insurance company for your infinite banking policy. All right. If you would like assistance with that, I have links in the description to get in touch, book a call, etc. I got masterclasses, Infinite Banking University. If you want to continue your infinite banking education, make sure you check that out. Either way, appreciate your time, guys. I hope you're crushing it. Leave any questions or comments in the comment section below, and I will talk to you in the next one. To your success, Matty Ice is out.